Rising home prices negatively impact almost everyone. Even homeowners who consider selling their properties do not necessarily gain financially, as they are forced to purchase another equally overpriced home unless they are willing to forego owning a home entirely. However, there is one group that has greatly benefited from the growing inaccessibility of home ownership: real estate agents. Across the United States, realtors have leveraged their market power to worsen the housing affordability crisis while earning substantial commissions in the process. Yet their influence may be at risk as a landmark antitrust lawsuit threatens to radically reshape the way homes are bought and sold, for better or worse. Recent data shows that the cost of buying a home in the United States continues to rise sharply, with prices increasing by 62% over the past year. Realtors are more than just professionals who host open houses and discuss school districts. They are part of a highly organized industry that plays a significant role in shaping the real estate market. While all realtors are licensed real estate agents, not all real estate agents are realtors. To use the title of realtor, an agent must be a member of the National Association of Realtors, a powerful trade organization representing the majority of real estate agents in America. Membership in this organization provides access to the Multiple Listing Service, MLS, a comprehensive database of residential real estate listings. Without access to the MLS, it is nearly impossible to operate competitively as a real estate agent. In order to gain access to this vital resource, agents must register as realtors, making the membership a valuable investment. The organization functions similarly to a union, preventing competition among agents by standardizing commission rates. The typical commission is 6%, split between the listing agent and the buyer's agent, and is deducted from the home's sale proceeds before any funds reach the seller. This commission covers services such as open houses, online listings, photography, insurance, and signage. After these expenses are accounted for, the remainder is divided between the agency and the agents involved. According to the U.S. Department of Housing and Urban Development, the average home price has risen from $272,000 in 2010 to $492,000 in the fourth quarter of the previous year. Since commissions are based on sale price, the average payout to agents has more than doubled in just 13 years, outpacing inflation by 120%. Furthermore, real estate agent expenses have not increased at the same rate, allowing them to retain a larger share of commissions. A decade ago, an agent would typically earn about $5,000 per home sale after expenses. Today, that number has risen to approximately $15,500. This profitability has triggered a surge of new entrants into the industry, with nearly 600,000 individuals joining the ranks of realtors in the past decade, making it one of the fastest-growing occupations in the country. Despite this influx, commission rates have not decreased. Even with today's higher home values, a 4% commission now yields the same income as a 6% commission did 10 years ago. Yet the National Association of Realtors continues to discourage agents from undercutting each other. This rigidity has come at the cost of ordinary buyers and sellers, as the structure of the market has become increasingly distorted. A primary issue lies in the high transaction costs, which discourage homeowners from selling. According to the National Association of Realtors, first-time home buyers now represent a shrinking portion of the market, having halved since 2010. Most buyers today are existing homeowners looking to upgrade or downsize. The 6% commission on the average home is equivalent to roughly half of the average American's annual pre-tax income. Because this cost is taken from the sale proceeds rather than paid up front, many sellers do not immediately recognize its impact. Given that home prices have never been a higher multiple of household incomes, the commission represents a significant loss in equity for sellers. For first-time buyers, the average down payment is just 6%, the same amount as the typical sales commission. For repeat buyers, the average down payment is 17.7%, meaning nearly half of their equity could be lost to commission fees. As a result, many choose not to sell. Combined with existing low interest rates, this has led to a stagnation in the housing market. With fewer homes changing hands, even high commission rates become irrelevant, as 6% of nothing remains nothing. Currently, over 1.6 million realtors are competing for a shrinking pool of listings. According to a survey by Alienable, 45% of realtors report struggling to pay rent due to reduced sales. Some have begun to defy the association's guidance by offering lower commissions to stay competitive. This practice reveals another major issue: the misuse of the MLS system. The MLS is the most comprehensive database of real estate listings, containing details such as price, size, and previous sale history. Unlike consumer sites like Zillow, it also lists the commission split between buyer and seller agents. In the United States, 89% of residential sales involve a buyer agent, who is typically paid by the seller from the 6% commission. In many other countries, buyers pay their agents directly. Through the MLS, listing agents can advertise the portion of their commission they are willing to share with buyer agents. Although they are not required to offer a split, those who do not are less likely to attract buyer agents, who may avoid showing properties that offer no incentive. This creates a phenomenon known as steering, where agents guide buyers toward listings with higher commission incentives, regardless of the property's quality or value. According to the antitrust lawsuit, this practice not only harms consumers who rely on their agents for unbiased advice, but also contributes to artificial price inflation by distorting true market value. As part of the settlement, the National Association of Realtors must remove commission information from the MLS. While this might appear to improve transparency, it could make matters worse. Agents often have close working relationships, and without public commission data, deals may occur behind the scenes, reinforcing favoritism and reducing competition even further. Online platforms such as Zillow and Redfin have begun to offer buyers the information they once depended on agents for, allowing more individuals to research independently. Some non-affiliated agents now provide flat-rate services as low as $1,500, further challenging traditional commission models. While sellers are unlikely to pass these savings to buyers amid limited housing inventory, the reduced cost of selling may encourage more homeowners to list their properties. According to Adam, a real estate data company, the average length of home ownership is now near record highs. High transaction fees, low mortgage rates, and strong rental markets have incentivized people to hold on to their homes longer than ever before. Should the lawsuit successfully reduce agent control over the sale process, it could encourage owners with multiple properties to sell. This may slightly improve conditions for everyday buyers, but it would be a substantial gain for institutional investors. A survey by John Burns Real Estate Consulting shows that institutional investors were responsible for 25% of home flips in the third quarter of 2023, and when combined with individual investors, accounted for 44% of all sales. Real estate's high transaction costs have historically limited its appeal as an investment asset. If those costs are lowered to levels comparable to stocks or other financial assets, it could attract even more investors and house flippers, ultimately driving prices higher and offsetting any gains from reduced commissions. Thanks for watching InvestingFlix. If you found this video helpful, don't forget to like, share, and drop a comment below. For more expert insights on personal finance, investing, and wealth building, hit that subscribe button and turn on notifications so you never miss out.